which is a great congrats.
Yeah, great chance. Yo, yo, yo. Hey, cats and kittens. It's your smooth talking holding bags here with another TA report. We got Gautam GP is here, and our good friend Nick Jeff DI will be along shortly. Hi, GP.
What's up, Bags?
How's it going?
The thing that I thought was gonna happen is happening. Sorry, the thing I didn't want to happen is now happening.
The lockout rally?
Not the lockout rally, but when we get a correction or move down, so to speak, all the things that refuse to participate on the upside are now dying, right? Like it starts with you can go through the list, but everything that got to the top of the resistance is just it's just getting beaten up and destroyed. Square, Shop, Carvana,
Tesla, some more. I know they didn't run up.
never got to
I
the
know. I'm just beating up on Tesla.
that chart looks like it's about to fail so badly. Usually in these moments, it gaps down after this and clears the whole range and then just dies and dies and dies. So fun times.
I'm feeling great about my quarterly stock pick today.
What was it again?
I'm feeling great about my quarterly stock pick.
I know, but which one was it again?
Tesla, feeling great. Hey, if this had happened a year ago and Elon laid off 10%, it would have been worth at least a 4 or 5% day.
Dude, that's exactly what I was saying in my Discord server is like, dude, even crappy ass Roku that's unprofitable had a 10% pop when it laid off 10% of its workforce. Tesla, no matter what the news is, it's in the we're gonna sell it mode.
It has been in sell it mode, basically. Well, I mean, we can go back. We're not going to call this sell it mode. That got bought up. So basically, since July of last year, it has been in sell it mode.
Literally, there's nothing Elon can say or do or to change the trajectory. Dude, if you look at the amount of bearish flow in Tesla, there's nothing that's going to change this at this point, right?
It's a lot.
It's a lot. It's a lot.
And that's not just Tesla, that's anything automotive, especially EVs.
Yeah.
It's getting hammered, monkey hammered.
Yep.
I mean, we can look at whatever you want to look at, but Rivian slaughtered. Look at that. Yeah, just puked it all up. GM. Hey, I mean, at least it's only in a 3-week down week. Ford just looks awful. Who else?
And so yeah, those look awful. My thing is, we've talked about this, I think, about a month ago, right? Which is this going to be the lost decade?
We talked about this a year ago.
Yep. Like, there's things that are going well. I get that, but there's so many names that are getting to the top of the box and just getting slammed. Small caps to start, right? Got to the top of the box, tried to break higher, slammed.
Crypto, the same thing, right? I mean, we can go over and look at some of these altcoins, huge ups. I mean, and then you retrace 50% from the highs on Link. ETH, not as bad. 31%. Bitcoin's actually being very strong in comparison. 14%. Yeah, it's not for the squeamish out there these days, that's for sure.
Yeah. We are 4% off all-time highs, by the way, and things are breaking down or not breaking down because nothing's broken down. Even Tesla has not broken down yet. It might tomorrow, but Tesla's still above that 160.51 level.
Who's buying though? With the flow like it is, who's buying it?
Ah,
I mean, is Kathy full porting Tesla tomorrow? I don't think so.
I think so. For me, there's only one thing that changes the narrative. Elon buys more shares.
Yeah,
The shares that he sold, where he destroyed all investor confidence.
yeah.
If he buys back shares, that's the only thing I can think that can change how the flow will look. Because
After he bitched and moaned and needed more control, well, now's your chance, Elon. Buy some. Put your money where your mouth is on your baby, right? Like pick up some shares.
yeah, but he's too busy spending money on Twitter, so it's not gonna happen. But
Yeah, yeah.
to me, that's probably the only thing that's gonna return investor confidence.
That's fun.
Yeah, like if he steps down, which I don't think he is, but if he steps down, is that good or bad? I don't know anymore.
Yes.
Everyone keeps blaming the performance of Tesla on Elon and his everything. So if he steps down, technically the stock should go back to all-time highs, right? No longer Elon's there. Everything's going to be all golden now, right?
Well, not for the people who only bought because of Elon. No,
Yeah, I know.
they'll be fleeing in boatloads, right?
Retail goes by institutional steps in. Who takes it higher, retail or institutional?
Does institutional step in?
Without Elon, maybe. I don't, because dude, the company's still well. They're still doing well. They're still profitable. They have $30 billion in cash.
What up, WC? It's our good friend Anchor's length of breadth deterioration has equaled July to October 2023.
Yeah, and we're only 4% off all-time highs. So tell me how much worse it's gonna get.
I don't know. That's why we do this pod, is to elaborate on what we think it might do. I've been in the sideways as a direction two camp for a while.
Yeah, and we're in sideways direction,
We're
dude.
sideways for 1, 2, 3, 4, 5, 6, 7,
11
8, 9, 10, 11, 12.
since
12.
last earnings
Yeah.
season.
Yeah. That's fun time. Bank earnings are out, right?
And Goldman, which got destroyed on JP Morgan, then pops today, and you're like, oh, well, I guess they made it red as well.
JP Morgan's still down. It's near the lows. That's okay. Poor Jamie Dimon.
We're at 4% down on the Qs from today's close to the peak, right?
Yep.
And so what if we lose, what did we do, 10% last August to October?
Well, in fairness, I I think most of the pain isn't coming from people in the indexes. Most of the pain is coming from individual names. I mean, AMD, for instance, is down 30% since its highs. I mean, Apple bulls have been in a house of pain for how many weeks?
It reclaimed the 9 last week.
For basically 17 weeks. Apple has been in a downtrend and is currently sitting 14% down. Nvidia bulls we gotta be feeling pretty good. They're holding up better than most, only 10% down. Meta, gotta be feeling better than most.
And Netflix remains the only big FANG name that has not taken out all-time highs, by the way.
Netflix. My question is, did we just correct in function the same way? Yeah, we can correct through time and price, or time or price. A quick knee jerk down with so many weeks sideways, that can be a correction. Dubsy could be.
So yeah, agreed. And so my thing is the interest rate names, sensitive names are getting still hammered. So even if you're in, unless you're in mega caps, you're down a lot more than 4%, to be honest, from
Yep.
whenever you
Hey,
were.
we mentioned that a couple weeks ago. Mega caps probably stay afloat for a while, right? The 10-year popped back to 4.6%.
And
So
today's,
3, 4 straight weeks of positive growth to the upside on the US 10-year.
yeah,
Yes, Jason, Netflix earnings is this week.
yeah, Wednesday after hours, in which in 1.5 to 2 seconds after 4 p.m., the entire fate of its future will be determined as always. It'll either gap down 20% or gap up 15% and then go sideways for the next 12 weeks. Because that's the only way Netflix moves.
Let's look at gold. We were talking shit about gold. Look at that sucker. The breakout keeps on breaking out. There's going to be a lot of people caught chasing this.
No, they're done.
They're done
Sorry.
chasing it.
I mean, like they're gonna try to incrementally push higher, but they're not gonna get there, in my opinion. That was a big, big sell off in volume, in my opinion.
Last week.
Yeah, last Friday. So even though today hammer, maybe it goes higher, but yeah, Friday was the warning shot. So it may poke up and through to like, I don't know, 230 or so. But I feel like this move is in need of rest.
Gold looks like November 2009. I don't know what November 2009 looked like in gold. So let's go look. November. Oh, he thinks it's going to still has some room to go up, then sideways, and then up some more. Anchors, you still a gold bug? It's a big move.
Yeah, I can see it, but that still calls for about a 17% pullbacks and basically a retest of the breakout, which is around 200. So that's the rest that I'm talking about. I don't think it's going further down, but I mean I don't think it's got a lot of room left until it gathers some buyers.
Yeah, there's some similarities there. I can see the structure of the pattern.
Yeah, how are the structurally similar Tesla patterns working out?
Not great. Right. I mean, we gotta be honest, gotta keep it a buck. Not great.
No, they're terrible, right? Every time you think it's going to happen, it's just more selling. And the reality is, it's not a lot of selling. Like, there's not a ton of volume here, in my opinion. But it's weak as weak. Its flow is taking over. This has no buyers right now, and needs something to change that. Earnings is, in my opinion, not going to change that. If not, it's going to make it worse. But yeah, I don't honestly know anything on earnings that will change the direction. It's still sideways, man. It's still in the same price where it was last April. So
Yeah, could go either way. I think there I think there are a lot of names like you mentioned GP that are basically clawing on for dear life, and you can see reversals out of that, but I like to go with the trend usually. And right now, while we are sideways, we are experiencing some selling.
Yeah. So the one that kind of looks nearly symmetrical is Square. If you bring up Square,
What time frame?
weekly, do weekly,
There you go.
and then include the COVID, go further back, right? No, further, more back. The
Well, that's
base into
COVID.
COVID.
Yeah, there's
Most
COVID.
the base
Oh,
into
the
COVID.
base, the base.
Yeah.
Got it.
So you saw like this big base into COVID and a quick flip down, and then it launches, right? Like it almost looks the exact same. Um, it's possible that we as the market we have a quick flip down overall, and then we launch. Like I think the 11 weeks has shown you that there has not been a lot of buyers stepping in to push us higher, right? So typically when that happens, we go lower. The question is lower in time or lower in price. And so far it's been lower in time, and now price is potentially getting there. And so it's interesting, right? I've been asking the question, what happens if we actually get a full-blown correction, right? Like all these names that haven't participated, they get smoked.
Nick's here. Nick has joined. Hello, Nick. Welcome.
Hey, I'm sorry about that. I total brain fart on time,
Well, it
but the
happens to
kids
us
made it
all,
home
my
in like
friend.
11 minutes.
It is
Nice.
all good. Hey,
That's
how
good.
awesome is this market, Nick? Aren't you excited to be talking about it tonight? How lovely and bullish, and how much money everyone's making.
Um, I mean, I think as a longer term bull, generally, I get kind of excited when we go into corrective periods because I know that more fresh opportunity will be developing. Like, for instance, like that June through, let's just say, November time period. I think when we see markets like that, I think that's when, yeah, the my confidence builds in fresh positions when we're coming out of big corrective periods like that versus mid trend.
Were you reading the chat? Because that's the same thing Anchors is saying in the chat.
Oh no, on YouTube or no? What up?
Yeah, that's
While you
basically.
do that, so while you
to
do
what
that, you bring
to
up the
what
Nasdaq chart again.
Can I bring up what? Did
The
you read
Nasdaq chart while you talk, Nick.
the
I
full
think to
Nasdaq
GP's
composite?
point, yeah, what does not like what has not participated is going to, I think it's going to get those names will get absolutely clobbered, and I'm not sure that they will fully recover in kind of in my opinion.
It's
Or at least
clobbering
just kind of
time.
So before we get into clobbering, right? This is the only chart that gives me somewhat hope, Nick, is that if you go to the daily time frame bags,
Yep.
so the Nasdaq composite, the one that holds a lot more stocks than the Qs, which is the NDX 100, gapped up on, was it 223, 222, February 22nd, and today we just tested
yes.
that, and we did not break it. Right there, that gap.
Yeah,
We
yeah.
did not break that gap. Qs did, but Qs also did not fill the gap on a day like today when things were just nonstop downtrend, right? From the moment that sell came in the afternoon around 1:15, it was just straight down. And then as soon as we got straight down, if you look at the Qs as well, as soon as you got down to the to that, I don't know, 430 level, we just went sideways.
Sideways. Yeah.
Right? So like literally just went sideways there. Like for something that was accelerating to the downside, what's another 5 points to fill that gap? Right? Like Why wouldn't you? And the other thing was the VIX. The VIX tried a bunch of times today. 1, 2, 3, 4, 5, 6, 7 different attempts at clearing Friday's high, and then it actually closed below. It even tried to break out twice, and both times it got sold if you go to the 5-minute chart. Right? So that first big leg up, right, with the red candle kind of inverted hammer, that got sold. And then it was like, okay, well, we're going to try again. And they had that big green flip right through. And then the next candle was straight down. And then it tried like a bunch of other times into the close, and it just didn't break it. So there's a few points for me that I think we might be at the end of this versus just the beginning, but it still sucks to see like Shopify murder, right? Shopify hit 68 today. So like that's no fun.
Yeah. Yeah, I'm with you.
Like the dispersion underneath is pretty wild compared to what the indices are doing already. This is
Sean.
very similar to the July 2023, right? Like everything got to kind of like the top of their ranges at that time and then got smoked for like I think Roku went from 97, 98 all the way down to like 450 or 45. You had like 50% haircuts in 4 months in a lot of names.
If we do see follow through, let's say either the IWIC or like the Qs, if we start to see follow through, would you at what point would you think that we're looking at something like June through November versus like something harder, like a more like a deeper correction than that?
So to me,
Because
if
the
this,
way that I'm kind of, oh yeah, go ahead.
so to answer your question, to me, I think we talked about this a couple weeks ago, which is it's got to continue to be a lockout rally, and if it starts to break down further, in my opinion, like if it starts breaking some key levels, I don't think it's the dip you want to buy, right?
Sure.
And that's kind of my opinion. If we start holding at good levels, then maybe it becomes a dip you want to buy. But like it's
Because
impossible to
we're
follow indicators. McLennan hit minus 280 today on a
dude, I
4%
know.
move down. What how is that a useful indicator?
Um, I don't know. I mean, indicators in general, I think you have to layer with your own technical analysis. You know, like for instance, we're seeing an oversold, or I mean, we're sorry, we're seeing an oversold reading, while at the same time, let's say on the Qs, we closed below that gap. It's like, or that gap low. It's like I don't know if I would necessarily use it as like let me just throw some darts out because we have an oversold reading. We need to see like kind of what you were saying, like levels hold. So if you're looking at the Qs daily, we've been more or less, let's just say sideways since that gap up like 222. Like let's just say that's where the sideways range started. We're no longer trending based on the close today. The big like what I particularly am looking for is to see the Qs kind of regain that 433 and hold it, because then we're back in the 433 to 450 range. Whereas if we continue to hold below this 433, then I'm kind of in the camp that we're going back to like 415-ish, which also I was going to say was kind of the bar that I'm paying attention to is the January 19th. It was a gap up and probably one of the largest up volume bars since the Q's kind of bottoming out back in November. And that's kind of the range that we're in right now, is just basically the 433 to 415. Like if you were to take like the Darvis type approach, you're just saying that once price retreats or retraces into the previous range, price is going to bounce around within that range until it either decides to climb out of the range to the upside or the downside, and then it's going to bounce around and, you know, in that box basically. I wouldn't be throwing, based on McClellan's oversold reading today, I don't think the risk reward is in your favor to say, like, I just want to throw money at, I don't know. I mean, Apple probably not the best example, but like Tesla or Microsoft, for instance. On the flip side, if you said, okay, we have an oversold reading, and tomorrow we do get a strong move through that 433 to the upside, you could use it in that sense, but it's a little bit, it'd be lagging versus what would be the correct word? I don't know if predictive is the right word, but it'd be more of a lagging indicator.
Yeah. Like I look at the McLennan even on the weekly, dude. It hit negative 194, which is actually lower by 30 points than October 31st, 2023 week, right? Like I don't know how you can use this indicator in a way that's meaningful. All right, like if the sell-off continues here, we're bound to tag the lows on the McLennan that we hit in October 2022. And we're like 4% off highs.
Yeah, what would likely happen if you're like, so with the McClellan, what it's basically telling you right now is probably now's not the risk reward's not even in your favor to the short side, because you're shorting in the hole. Yep. Versus price, either maybe we do see a little bit more downside, or it does bounce a little bit just to work off the oversold reading. Then you've got a little bit more room to the downside. I hear what you're saying. I'm just,
I know. I was just curious. I don't really use the indicator, so I was just curious. I'm like, this is kind of pointless to me. I'm like, what is this showing me? Like, okay, that people have oversold, but we're only 4% off. And so like I like things like extreme tick, right?
Sure.
So the tick has in the last, let's say, since April began, we've had 4 or 5 extreme ticks, one of negative 1698. Today we had a negative 1508. Ooh. And so like that's a better indication of downside extreme. So to me, where the VIX is kind of holding up and not breaking out, VIX breaks out if we get more tension, right? More war, whatever happens, VIX will break out. But if it doesn't, it's got the hallmark of potentially breaking down because it couldn't take out Friday's high. Could be an inside day, but basically it's kind of an outside day. It tried to take out the high and got rejected. So I do like things that are holding up. The mega caps are the ones that are holding up pretty well. So that gives you, and we're going into earnings season, so should be interesting.
That's kind of what has me in the camp that this, whatever we're in, whatever you want to call it, kind of back to like when I first hopped on, I think it's kind of great to see us start to pull in and correct here heading into earnings season.
But especially the ones that are going to matter are not the ones that are correcting, right? So it's everything underneath, sure. Right? So that's my bigger issue here is like it's the one underneath that are getting smoked, but it's not Amazon, it's not Meta, it's not Netflix, it's not Google, it's not Microsoft. Apple's been in perpetual downtrend, but even that tried to break it last week, right? So the mega caps are not the ones that are getting sold out, where their earnings are going to dictate the PE moving forward, right? So
Sure.
that's everything else is already getting sold, and we haven't even had earnings on them, so it's interesting. Right? Like take Carvana, for example. I know the earnings aren't great, but it's basically back to where earnings were when it broke out.
Yeah.
And we are still 3 weeks out from earnings. So is this going to go give us a full retest? I don't know. A lot of them look like they're going to. Like, and Tesla to me is on the verge of breaking down.
Yeah, that's ugly.
Dude, it's had 4 months of this year to have a chance to correct itself in its behavior, and every time it fails. There is, like, we can talk about structural patterns in Tesla till the cows come home, but none of the stuff in price action so far is representing any of those previous reversals to the upside, right? So I made a silly prediction of 315 for Tesla based on that potential reversal pattern, and it's failed every single moment. Like, unless this gaps up 40-50%, it's not locking out anyone. Literally,
Yeah.
it's not like
Gates
it's
wide
been,
open. Come on in.
Yeah.
it's been at
New
160
bag
since last
holders
April.
minted daily.
Dude, like and it's not going to gap up 40-50%, right? So who are we realistically talking about when it comes to locking anyone out? Like, no one's missed shit in Tesla for the better part of the last year. And at this point, the way it's behaving, why would you want to buy here when it continues to break down? I'd rather wait for it to show some backbone and then buy it, even if it's 20% higher.
Yeah, totally. Me too.
Because right now, the way it's looking,
17 had a similar move. WC is on fire. You put in work. We're gonna have to just invite you on the pod. WC, you're going in on the comments, brother.
yeah, I love it. I love the enthusiasm. I think you just got to be careful because 2017 and 2024 are entirely different monetary regimes, right? So in 2017, the only place you could put money was the stock market. Everything else, or VC or PE or IPO, pre-IPO, whatever, right? Um, right now, everyone has an option, but like I can earn 5.25% in my savings account. Why? I'm
Yeah.
not going to go full port shit, right? Maybe
Yeah.
they miss out, maybe they don't, but ultimately their money's still making them 5.25%.
Yeah.
So are they really missing out? Yeah, potentially. But if they haven't cared in a year and a half, what's going to make them start caring now? So I think a lot of the references in charts are great, but it was a free money society, and the only place you saw outsized gains was this equity market. It was the stock market. So unless that returns, it's hard to make those comparisons, even though charts look the same. Just keep that in mind.
Hey, dude, I meant to tweet you today. You have the potential to be pretty much right on with this XLE double top, by the way.
Yeah,
On the
it was.
monthly at least. Holy shit, like almost to the freaking penny. Well,
Yeah,
not quite to the
to
penny,
me, it
but
was
pretty.
not quite to the penny, but it was like, wait,
Yeah.
XLE is breaking out, but oil has been sideways. Like this, one of these doesn't make sense to me.
Yeah. What do you think about gold here?
We talked about it a little bit earlier. I think gold has a little
Oh,
bit more upside, but I think it needs some rest. So on, I think Friday was a warning shot. we've talked about that high volume warning shot, right? Doesn't mean
Yeah.
it can't keep going higher, but it's most likely going to pull in, I think, to a level where it gathers more buyers, which to me is around that in GLD. If you're looking at it, I would say right around that 203, 200 level.
Sure.
But to me, I don't understand. Like, it's a yellow rock. I don't really understand why it's. To me, there's a lot of confusion in terms of where I'm looking at price action that doesn't make sense to me, right? Like, uh, TLT, is it getting hammered today because of tensions or rates, right? If it's tensions, there's a flight to safety, which is bonds. So why aren't bonds up? Okay, so then you assume TLT is down because rates are going higher. So which one is it? Are we selling off because of tensions or rates? And then gold is strong while the dollar is strong. Does that make sense to you?
Yeah. No.
Right?
Yeah.
This is an inflation hedge, right? This yellow rock is an inflation hedge and it's breaking out. And so to me, it's like, so the gold is saying, well, we could potentially be in turmoil and tension, so that's why we're going higher. But then TLT doesn't make any sense. And so there's a lot of um, conflicting information.
Yeah. Wait and see, basically.
Yeah. I personally still think we're at the end of this, but that's me.
Yeah,
Uh,
I'd like to see a little more I need a little bit more info to really find any conviction either direction.
well, Miriam in the chat says the market looks dangerous. Do you guys feel like it's dangerous? I mean, we've talked about the indexes performing better than a lot of individual names, and I can understand in a lot of these individual names. I mean, I'm experiencing some pain too. Why it feels dangerous, but I mean, we still have mega cap holding up, right? We still have the indexes holding up. Is this anywhere you guys are feeling panicky? I don't get that sense. I mean, I'm not feeling panicky. I mean, I'm a few positions that I'm not liking the way they're looking, but other than that, like I'm not out here trying to sell everything and go all cash.
I don't particularly enjoy markets that are news driven in the way that they are currently,
Mm.
especially like that behavior last week, going from that massive sell off bar to the hold to that kind of gap up and rip to the gap down below that bar. And then, today, I think we see more downside. Where I'm currently sitting, I think we see more downside or more choppy behavior before we move higher. In a like a interim term, like looking at the weekly and the monthly, I still think both the weekly and the monthly look phenomenal. I would love to see, I mean, I don't know why I say I'd love to see it. I guess I wouldn't because I'm just as impatient as the next guy, but uh I'd I don't think I agree with UGP at the moment as far as closer to the end of this than the beginning. I think we're kind of in the middle. But again, that's just looking at the cues. That's not necessarily taking into the IWIC into consideration.
Yeah,
If I'm just looking at the cues, I'm just saying that the range broke to the downside. And so, I mean, hey, if tomorrow we get a gap higher and we're back in the range, my tune could totally change. But if we do see follow through is basically what I'm saying. Like we're in the lower range.
you got Netflix earnings on Wednesday, and I think that
Ooh,
will determine a lot of direction here.
sure. Yeah.
And so you could argue that every time Netflix has tried to break above 620, it's been sold, but it hasn't been high volume selling. But we know
No,
from
yeah,
2022 that Netflix can be down 200 points on very low volume selling and then die on earnings as well. So, but to me, Netflix is my indicator of where the markets go ultimately. And yeah, so that's the one I'll be watching. The Nasdaq Composite is interesting that it didn't even break that kind of gap like the Qs did. So maybe the Qs are leading to the downside here, which is odd to me because the generals aren't, right?
yeah. I think Microsoft was the only one that closed below its 50-day, if I'm not mistaken. Apple. Well, I suppose Apple too, but
Yeah, Apple's
I
been
thought Apple held almost exactly where it needed to. You got the 20 and the 10-day kind of curling right there. Yeah, I was gonna say I liken your Netflix or like my McClellan to playing blackjack. And let's say like what's the do you hit when the dealers show, like if you have a 12, right? Dealer's showing a 2, like do you hit that?
It's a
Well,
50-50
it's kind
shot.
of it's a kind of one of those arguments that most or blackjack players will have, and it's like if you're gonna hit it, you hit it every fucking time. If you don't,
Yes,
then you don't.
consistency.
Like exactly.
But you always
So
supposed to hit that because it's a losing hand no matter what you do.
I I'm with
And so
yeah.
you go down fighting because your money's on the line.
Yeah.
Yeah, to
So
me, like I know it's an argument quite often, but 12 against the 12, there's just too many cards in the deck that the edge is still towards the house. So if the edge is towards the house,
sure,
you
you
gotta
gotta hit it.
go
Yep.
down fighting.
Yep, I agree.
so Nick,
Yeah.
are you've been pretty clear that the risk is not good for shorts, risk is not good for longs. What might you be eyeing and what would it take for you to pull the trigger either long or short?
Um on the cues, I'll close back above 434. And hold, and I'd be eyeing all the mega caps and then basically anything that's showing relative strength at that time. So like I'd have my MarketSmith. So the way you can pull up like the MarketSmith growth 250 list, like you can hit it's like a play button, and it'll just continually kind of play and basically run through charts for you. So I would have that running, and then just kind of like my own list. But I'd be definitely going towards mega cap first, and
Mhm.
then anything else kind of after that. I mean, I think whatever the CPNG is definitely the standout name of the day. Goldman held up, I thought, all right. Um, yeah, that's kind of how I would look at it and how I would play it. But I think the Q has got to get back about 434 for me to put more capital to work. To the downside, I'm not really, other than day trades, I'm not really interested in playing the short side. I'd be too concerned with preserving my
Mhm.
mental capital, emotional capital, whatever verbiage people want to use. Because I do think that I think this is only an intermediate correction in a much bigger trend and freight train that is moving higher. What about you?
I'm content sitting.
Yeah.
For me, like I'm not in a rush. I said that last week when we were on. Uh, I'm not I don't have any strong convictions with all the moving averages curling over, and that doesn't mean to say that I'm a complete cookie disciple here in regards to you got to retake the moving averages. I mean, I like the Qs if it holds here. I think 434 is a good place to nibble maybe on shorter term trades, not necessarily going short, but maybe a trade long. But some of the individual names, I mean, I look at AMD and Amazon a lot. I still like AMD right here. I mean, it is below where it was all last week, which is not ideal, but I'm kind of content as long as it holds this like 157, 158 area. So it's still got a couple more points to come down. Amazon's been strong, so I'm less concerned with Amazon's 2 days to the downside here at, what was that, 1.5%, 1.3% down. Um, you know, it could absolutely catch here somewhere in the 180s. That would make sense to me. I don't think it needs to come all the way down to 170, mid 170s. It could. So I added some AMD last week. I think right around 170. And it was like 167. So right in the middle of that range last week. So I'm not in a hurry to add more scales, but if I do, like those are my two biggest positions. I like them, so I would consider adding to them, but not in a hurry. I'd rather see the market start going the other way before I start adding. I know you want to buy cheap shares, but it's tough to catch the knife, right?
Yeah.
So again, not in a hurry. I already have a lot of AMD and a lot of Amazon, so not in a. It's not like, oh God, I don't have any in this position. I got to add some heft to my position. No, these aren't piker positions. These are so.
Yeah.
Not in a hurry. I'm not day trading right now. I just haven't had the time. So otherwise,
I mean, I think it's the
I
most
don't feel
prudent
like
camp
I
to.
don't. Sorry, come back to Marion's point of view. Like I don't feel like it's dangerous. Yeah, I could see us hitting more downside, but I'm not sitting here like I got to get my money out of the market right now.
Sure.
I
Yeah, I
think
just
I
think
think
that, I
over the
mean,
weekend the war scares obviously uh, made a major impact on the cryptos, right? You saw those get slaughtered over the weekend.
yeah,
And yeah, to your point, the news driven reactions.
like unless they're buying up the bad news, it's not. I don't think it bodes well for the market. I don't think
Yeah,
it's a bullish thing.
yeah, yeah. I'm not saying it's bullish either. Like I'm still in the camp that we can go sideways. We can still go down some further. I'm not freaking
I mean,
out.
for the short term, like the momentum, even like short term swing traders, you got to take profits at some point. So I think the prudent thing is to be taking money off the table for those guys. And on top of that, like no matter what time frame you're on, there's only one direction your stops or trail stops should be moving. Like risk management above all else. Like you can always, I'm not saying to piker out and sell like or go to cash either, but you got to protect your ass. Like you
Yeah,
like money management is definitely number one. Um,
and fear is high. Anchor's
yeah,
just
for
mentioned
sure.
that. I mean,
What
fear
is
fear is
the
absolutely high.
is it? Is it extreme yet?
Let's go look at the old fear and greed.
Well, just look at our chat. Marion thinks the market's dangerous, right? That gives you, and you
True.
can put money in treasuries where it's not dangerous, and or into your bank account where you can make 5.25. So, um, I there might be fear of the market, so to speak, but
We're at a 41. We're in the fear. We're not extreme fear. We're in the fear. 50s
I
near.
honestly don't think there's a lot of fear. That's me personally, but
Really?
yeah.
GP on that Spaces call that you did with Short Seller and Jimro.
Yeah.
I kind of tweeted about it earlier, like, and this is kind of where I'm trying to actually grow as a trader is okay, so like let's just say the SPY pulls in here like another 20 points back down to 480, right? The 200-day moving average is at 465. Even if the SPY pulled in a little bit more, what does like a 3, 5, 8, let's say percent correction in the indices, like what is that? I think not just me, but I think people need to like take that into consideration with in terms of like their individual positions, because like what would look super pretty and great for the indices may not to your individual names, especially if you're not in mega cap names.
Was
You know
there
what
a
I mean?
question?
Yeah, I was kind of going out to what I was going to ask you as you know, definitely more
So
with
what
options.
what
Like,
I've noticed in the last 2 years or so is the dispersion trades that happen underneath the markets in their corrective modes are a lot more brutal than the non-dispersion trades. And the non-dispersion trades are basically the generals, the mega caps, right?
yep,
You've essentially had Tesla and Apple, more importantly, in a corrective action for what, 6, 8 months now, 9 months, something like that. So I'm not sure what the exact question is, but you're
let's
this.
say you were looking to DCA and I don't know, let's just say, I don't know, you know, pick one like Amazon or whatnot. If you think that we're, you know, heading into like, let's just say a typical like 6 to 8% correction, what does that mean for your Amazon position? Like, how, if the indices are going to correct, let's just say 6%, or you're anticipating a 6 to 8% correction, how hard would you anticipate Amazon pull? Like, how hard would you anticipate Amazon pulling in? Or is there a way to identify that
I think so.
other than just looking at a chart and like saying, okay, here's a level of supply, here's a level of demand? You know what I mean?
Yeah, so from that perspective, I'd be looking at earnings, right? So this market
Okay.
over time is determined by your EPS ultimately. And so for Amazon, I would go back to the prior earnings, right? The prior earnings is right around the gap is around 167 and the high is 172, right? So if we pull in, that's where buyers stepped in based on earnings, right? To say, hey, well, their EPS is growing. So I'd be looking for that area to hold.
Okay.
And if buyers who stepped in there get flimsy and start selling at that point, it accelerates the downside. So if it doesn't, it fills that gap and it goes much lower. And so you can say that for almost all these mega cap names. Meta, same thing, right? Meta monster gap up. Hasn't been a lot of distribution, but you'd ultimately want to see when they announced the dividend, you have an essential new class of investors, and all those investors that came in on that day, because now they're fund eligible for a dividend stock, is the floor that I'd want to hold, right? That's the level I'd want to hold. Otherwise, you're going to go underwater because those people buying for dividends might not sell, but the people who are buying the Momo off the dividend are going to be the ones who are out, right? They get their dividend and they're going to clear out. So I'd be watching earnings candles to be the ones that not like, so when we've been sideways for 11 weeks now, right? In the markets, your moving averages are useless.
Yeah. Yep.
I don't know how many ways I can say that 50-day, 20-day, 200-day, all that stuff is fairly useless when you're in a sideways market, right? They're all, the 9 is where the 20 is where the 30 is where the 40 is within points, right? And so
Yep.
they've caught up and gone sideways. So even the smallest of blip down, you start breaking moving averages, right? It's just normal. So to me, they're not as useful in a scenario like this. So I'd be looking for pivots, and pivots usually include earnings gap up, fundamental changes like guidance, like the if you go back to the NVIDIA chart, right? And go back to the May gap up in 2023, the May gap up, right? That candle never broke.
Oh, yeah. I see what you're
Why?
saying.
Because that was a major revision. On earnings, they guided up on 100% revenue growth. So that's the level you should be watching, right? That's forget your moving averages, forget anything else. That's what changed fundamentally for NVIDIA. And while it consolidated for 6 months and everyone's like, it's overvalued, it never ever broke that down, right? And then it broke out. And so that's the level I'd be watching here, right? On NVIDIA back then. Now you have a lot more information, a lot more stuff. So you have to take that into account. But if you're talking about consolidation, NVIDIA guided to 100% growth quarter over quarter, not year over year, right? Quarter over quarter, 100% growth. And then it consolidated for 6 months. And everyone's like, oh my God, NVIDIA is too high. It's too expensive. No, bitches. It was consolidating for 6 months.
No, bitches.
Yeah.
It wasn't overvalued at 100 and it's not overvalued at 400.
Yes. Sorry. It's just like, no, man, you literally had something that fundamentally changed how they value their their fundamentals of the business. Their EPS growth was like insane. And you're like, no, that's the end of this move. You should probably go back to doing something else.
Yeah, I feel you.
So to answer
I
your
mean, the
question,
candles, yeah,
I'd use earnings as your pivots, right? In these types of markets,
sure.
because it earnings candles should hold because something has fundamentally changed.
Well, let's get fired up for the next month because we've got earnings fast and furious for the next couple weeks.
Yeah, and I think Apple's earnings is probably the one that's going to matter the most, to be honest.
Why?
Um, for a couple of reasons. Apple is like literally at the top of every ETF, every fund in terms of how many people hold it, right?
Yep.
So they've been in what is it, 4, 5, 6, something like that, straight quarters of revenue deceleration and EPS deceleration. So it's something that like has Apple figured out how to stop that bleed? And if they have, then almost everyone else will eventually figure it out as well, right? So um that's the one I'd be watching in terms of what the markets do. I obviously Netflix is the guidance for I think um all earnings, and typically it's buy into Netflix earnings, sell into Apple earnings, right? Like that's, but we're just selling straight into Netflix earnings. So.
Yeah.
Yeah, I'd be using EPS and fundamental shit. Pivots is where I think matters more, which is why I pointed out the Nasdaq gap, right? Like Q was a brutal bar. The Nasdaq composite was also a brutal bar, but one filled the gap, one held the gap.
Yeah.
And like for the Nasdaq composite, every single time in the last 5 months, it's been a gap out, right? And so it continues to hold that gap and go. And if you go back to the SPY daily chart, if you draw a trend line from the lockout rally that we called on 11/13, that gap up, keep going back further. Yep, right there. Is yours log or
I'm always log.
okay? So if it's non-log, it tagged that trend. So it hasn't broken the uptrend either. So things to watch.
Log schmog.
Everyone wants 480. Literally, the whole planet wants 480. And they've been calling it for like 3 months now, by the way, or 2 months at least.
480.
It's the original breakout, retest of the all-time highs.
Yeah. Be the point.
I personally don't think
I don't know if I think it gets that pretty or that perfect.
I just don't think you want that.
Yeah. Oh man.
Because like you said, 200 days at 465, we get 480. We're going to 465. If we go to 465, we are retesting 458.
Okay, let's not start talking crazy here.
No, 458 is the July high, so it makes sense, right? It's that base breakout from 2022, 2023.
There is going to be so much puking if we go down another 10% from here. Oh my God, the fin twit will be unbearable. I mean, it already is. That would be a 12.58% correction.
Yeah, like I said, I think 480 doesn't hold and you get 458. So
Buy it there, buy it there. It's
and
not
458 makes a lot more sense to me because that's literally the top from April 2022 and the top from July 2023. So that like in terms of confluence, that's kind of where I'd be looking for it to hit, which coincidentally is where the 50-week moving average is.
Hey, look at that.
Say that one more time. If you think if we go after 480, or what's the next? Say that again. Sorry.
I think the 50-week moving average is rising. It's at 460 right now. The pivot high from July 2023 is 458, 459, somewhere around there. And that also coincides with the highs from 2022, where we broke down and lost 20 something percent, right?
Oh, sure. Yep.
So why I think 480 doesn't hold is because that confluence of support seems more likely to tag.
Okay.
IWM goes bankrupt, and anything that doesn't go bankrupt becomes a mid cap. Because
I really didn't like seeing the move in IWM because the move today would constitute or confirm a breakout failure in the IWM. And anytime I see
breakout failures. Sorry, go ahead.
Anytime I see a breakout failure, obviously the hope, especially in the bullish case, is that we put in a higher low somewhere. But in the back of my mind, I'm not going to be surprised if we head back to the low end of the range. Does that mean I think we're heading back to 170? I don't think so. I think we kind of put in a higher low somewhere around the 200 day, which is at 190.
188 is 50-week moving average as well.
Oh, right on. Okay.
And that puts in slightly a higher low.
Yeah. Higher low, just in the sense that like we're not going back to retesting the lows or retesting the range lows.
Yeah, so you can argue double tops, not in IWM because it hasn't double topped in my opinion, because it hasn't even gotten to the top.
Yeah, for sure.
So the double top is more likely in MDY, which is mid caps. So if you bring up MDY bags
Got it.
and go to the weekly, it tagged all-time highs, tried to break higher, got sold immediately down on pretty decent volume. So this is probably more of a double top to me. And then you have double tops in Amazon, right? XLF is another one. So this is, to me, these are the double tops that are the ones that scare me more. IWM has been in a shit trend for the better part of 3 years. Like it's just getting to the top of the range and coming down. And IWM's actually been on lower volume. So that one's interesting to me.
Doesn't look great.
No. So when people are talking about dangerous, like Marion was talking about dangerous, I can see it. I can see some of it.
I think probably one of the more bullish things we could see going into or going like coming out of earnings season is if kind of same thing. Like they smoke some of these names post EPS and those gap downs get bought up in a relatively short period of time. I think that's something that could be on the horizon. So instead of like that could drag the indices down in a much faster fashion than just like, sideways chop like the June through November. Like June through November, I mean, that's like 6 months of sideways action where if they like beat the shit out of these names into the EPS, like it could be more of a sharp, like V type bottom that, some people are calling for than a slow grind. But just I like to write out if thens. Like even if they sound stupid or retarded, like I think I try to look at it as a game of odds and probabilities, and the more if thens that I have written out, the less surprised I am. I even write down half the shit that you say. Like even if I don't agree with it or don't think it's likely or whatever it may be, I still write it down in an if then scenario, and it helps me feel like I'm prepared. Just
that's all we can be,
there.
right? Ultimately, we can
Prepared.
Yeah, we can only do probabilities, right? When it comes to this stuff, and it's like the probability here is IWM doesn't look great, but there's not an insane amount of volume selling here, right? So it could just be a retest of a higher low. I would have expected the way rates are behaving, right? And everyone's calling for higher for longer, and I get that. And TNX is doing pretty well. It's breaking out. I would have expected a lot more selling on the small caps. Like we did all of 2022, where we sold like we couldn't sell anymore. And now all of a sudden we're not selling as much. So there's definitely things to I know we're over time bags, so
That's okay.
um
It's been a good conversation. I'm not going to cut the short.
So the double tops in certain things are concerning, like XLF, which took 2 years to break out of the consolidation, failed, right? Has it confirmed the failure? I don't think so, but this is something that you should watch. And then the mid caps, and then things like Amazon, which could not take out all-time highs, finally does, and then sells off. Like you can't make this up.
It's fun.
And then you have the
I mean, that's what the
potential,
market
like,
does. It's designed to fool the most amount of people, whatever the saying is, fool the most amount of people, most amount of time.
yeah, my peculiar thing in my like where I'm not seeing a ton of volume yet. We're getting some pretty outsized moves. So that's always kind of pay attention a little bit more moment.
Hmm.
But we didn't get a crap ton of volume in 2022, and things like I think we talked about it on our podcast. I think our first podcast back in January 2022 is like the volume at which things got sold was pretty minimal. Like Roku, I think we talked about Roku in that segment.
Mm-hmm.
Roku went from three, what was it? I don't even remember.
Roku was something stupid.
Yeah, it was like it was 490 and
Oh
went
my
all the way to uh before January 5th, 2022. It was sitting at 200. So it had already lost nearly 60% and the volume was barely there. And I said, if this market breaks down, this volume is going to accelerate to the downside, right? And sure enough, that's exactly what happened. So, and then it's been stuck, right? Like people are like, nope, I don't want any piece of this anymore. And so volume isn't that heavy here, but if things start breaking more, that volume will accelerate to the downside.
Do not want. Do not want. All right, we feel good now. We get it all out. Lovely.
Yeah, don't feel good, but
Hey, the last time you both were talking all this bearish nonsense, it turned out pretty good. So I'm not saying you
Yeah,
guys
it did.
are
GP literally
double
said
jinxing it,
everything looked so ugly. It looks great.
yeah.
Remember that?
I do.
I remember. I'll never forget that. It was
I do.
amazing.
I do.
Yeah.
Yeah, and so we're at that kind of similar point, and we're only 4% off in the markets. And so right, so everything kind of looks ugly and everything looks like it's going to break down. So those moments are always interesting.
All right, that's going to do it for the show. Thanks, everyone. We had a nice little turnout. Thanks for joining us for today's pod. We'll be back again next Monday, same time, 8 p.m. Eastern time. It's your boy Bags, GP, JFDI is signing off, and we'll catch you then.